You were at BTC Amsterdam. How was Amsterdam, first of all?
Yeah, I mean, I guess just quickly before I go on to the conference, if we were to just cast our minds back, probably even a month ago or 6 weeks ago, we were plucking at sort of points of conversation around what was going on in the market, both on Ethereum blockchain as well as with Bitcoin. Whereas now, in the past couple of weeks, I don't know whether it's just sparked because I've been at the Bitcoin conference, but all of a sudden it feels like there's just so much, so much excitement, in the space. I've had a real turn in my own sentiment because it can be hard, and I'm sure there's many people that will sort of listen to this that have been through crypto winter, and sometimes it's just so demoralizing. But all of a sudden, there's actually a lot of positivity and sort of bullish sentiment, I think, in the market, which is quite exciting. But from a conference perspective, so it was my first Bitcoin conference. There are two that usually run per year. There's one usually over in Miami, which is huge. Talking sort of, I think the biggest one they did was around 25,000 attendees. The more recent one, even during crypto winter, had north of sort of 12 or 13,000 attendees. So it is a big turnout. But as it is in the title, it's very Bitcoin specific. So it's everything Bitcoin and sort of Bitcoin only, really, throughout the conference. But yeah, I mean, it was super interesting to get a take on what's happening on Bitcoin, because it's quite often easy to just assume Bitcoin's this store of value. It was the first blockchain that was sort of made available in 2009. But actually, there's a lot of people still building in the space, and there's a lot more, I guess, relevance from Bitcoin in sort of wider macroeconomics, which is quite interesting to see that pivotal shift over the past sort of 12 to 18 months, even in comparison to 4 or 5 years ago, where that sort of macro view wasn't as, I guess, prevalent for Bitcoin pricing in sort of the same capacity and degree.
Who's at the conference? Is it more development related? Are you seeing financial institutions? Who's at Bitcoin Amsterdam?
So you have a wide array, right? So I would say a good 20, well, probably actually 40% of the people there were very hardcore Bitcoin, either mining, having their own mining rigs, were very early adopters or crypto natives, or people building in Bitcoin. So sort of looking down the sort of ordinals space, and that sort of thing, Lightning Network and so on. But then there was also those companies that are from a traditional space that have started investing into Web3, or they may be liquidity providers to the larger brokers. But Bitcoin is obviously one of their offerings, but not their only offering. So there was sort of a wide array of people. But in terms of the speakers, there was some really quite well known speakers there. So there was a number of sort of the CEOs and founders of a number of the large Bitcoin mining companies that are listed over in the US on the stock exchange, and also some controversial characters. So Edward Snowden did a live stream, I believe, is in Russia somewhere, doing this stream and giving his view on Bitcoin. But you also had Julian Assange's wife, who was there and sort of speaking as well on Bitcoin. So it was quite a strange array of people that were there. But what was definitely clear was there were some people there that have been in Bitcoin since your 2010s, 2011s, 2012s, which is quite amazing considering they're still here, sticking around and yeah, enjoying themselves.
How do you tell they're just covered in the finest clothing and massive amounts of jewelry, or
Yeah, I mean, there was definitely some nice watches. Let's put it that way. But what was quite amusing as well is there on one of the evenings you have people that are in like a mask with sunglasses on because they're scared that they're like these Bitcoin whales, and people want to get their Bitcoin. It's all pretty wild, but it was all in all it was a really good conference. Met some really interesting people. Which we've already showed, I guess, on our space of Abdul coming in earlier this week. So yeah, it was a good show.
I think you've got to start wearing the mask and sunglasses, kind of dressing like a bandit at the office in London, and see how that
Yeah,
goes over.
absolutely. Get a little tasty crypto mask and some sunglasses and
You have too
maybe a
much.
cherry.
You have too much Bitcoin. You have to remain anonymous from now on.
Absolutely.
Well, that's awesome. I mean, it
Amazing.
sounds like it was a good time with the right people there. And coincidentally, a couple weeks later, right, antenna are up. We're feeling good as well. We've got some price action to the upside. We'll see if it lasts or not. But when you go back to the conference, I mean, what are some of the things or the themes that are emerging that have you feeling bullish about Bitcoin? And not bullish around the idea that, great, we went from 25,000 to 30,000. People are building. What are some of the core themes that you think are going to drive the cycle, let's say over the next couple of years, and maybe to prices that we haven't seen yet, or maybe back to new all-time highs, but certainly what supports that?
I would say there was definitely a reiteration on a number of the points that we've discussed on our spaces the past couple of months. So that is the uncertainty with the macro environment global in the US and globally, with all of these terrible circumstances that are rising with wars and whatever else, but also the halving that's coming up in April 2024, and also the ETFs, which have obviously been filed in their masses throughout this year. So one of the speakers that came to the conference, the title of the speech was Bitcoin: Flight to Safety and Evolution to Utility. And what made that come back to my mind now was the fact that Larry Fink, the CEO of BlackRock, was only on Fox Business a few days ago, where he mentioned that Bitcoin was a flight to quality, which is quite phenomenal, especially when you see the churn of events comparing it to his previous views on Bitcoin. But nonetheless, I mean, it's a very bullish signal coming from the CEO of the largest asset manager in the world, which I guess leads nicely onto the sort of ETFs, where you have a number of the largest asset managers now that are all coming into the space and filing for these ETFs. You've got Grayscale's Trust, that they've just won the latest lawsuit on the conversion from the trust over to the spot ETF. But there was definitely an opinion and a view at the conference that the likelihood is that there would be sort of a blanket approval across those spot ETF applications that were meeting that sort of minimum criteria that was quite possibly being set by BlackRock, say, which would be under the largest scrutiny probably of all of them. But it was clear that there couldn't really be an approach of approving one of these largest ETFs, and that it would give that really unfair advantage, really, going out being the first mover in the space, especially as BlackRock's just going to want to accumulate as much under management as possible.
And you see that in ETFs for sure, where there is a first mover advantage. Not that you don't have followers, but a lot of times the first fund out with a certain theme is the biggest, or ends up being the biggest as a result.
Absolutely. And I guess it's just making sure that it's not one ETF that's listed per month, as long as they can be pretty brought out in a relatively close, I guess, harmonic way, then hopefully it gives an opportunity for those assets to be spread across a number of the funds, rather than your smaller scale asset managers just getting pulled away basically because of that suck towards the largest asset managers.
Was there any view around whether one event was deemed to be more significant than the other when we look at the halving or we look at the ETF? People view these kind of with an equal weight, or are they more excited about one over the other?
I think with the people that were at the conference, what I was quite surprised to see was that the conversations weren't largely around price action and whether Bitcoin's going to go to $200,000 or whatever, but rather the core principles behind Bitcoin and why it started and what the actual reasoning was behind the whole peer-to-peer nature that Bitcoin is. So what was interesting was that the excitement was more around what was being built on top of Bitcoin. So creating smart contracts on Bitcoin, Lightning as a mechanism for payments to be made with the use of Bitcoin, and also the fact that it's a hedge against inflation for a lot of economies that are being hit really hard by the sort of exceedingly high levels of inflation, where you're seeing countries actually, employees and employers, I should say, are paying employees with Bitcoin because it's then going to be they're going to be twice as well off in 12 months' time, just from a sheer hedging against inflation point of view, let alone any potential upside in price for Bitcoin. But if I was to say from sort of a bullish sentiment perspective in what was being said most, I think it's clear that the ETFs are majority of the headlines at the moment. They will be dominant in terms of the conversations that are being had. If you look back previously when sort of even retail traders came in, it's because Bitcoin was on the news for its price action and Bitcoin doing this, Bitcoin doing that. But with the ETF, it's then a really good talking point for these news outlets. Whereas the halving is something that's just not going to resonate in the same way, I guess, with retailers. They have no idea what it is. But if they see, oh, look, I can, with my BlackRock funds or my iShares funds I've got currently, I could now buy Bitcoin with it, rather than having to go through a certain intermediary, and that sort of thing. So I think that was sort of the general sentiment and view.
Okay. You bring up some great points around inflation. I was talking to Mike about this yesterday. And when you say BlackRock and you talk about Larry Fink on TV, and I think his comments recently, as you mentioned, what I'm not sure many people keyed in on because they can often be conflated, right? When you use this phrase, but he said flight to quality, right? Not flight to safety. And there's a key difference there. And I don't know if everyone has picked up on this just yet, but people refer to Bitcoin, and in some cases, other digital assets as this pristine collateral, and certainly plays that role, maybe more so in a more digital kind of environment that I think we're moving towards. That said, if we're going to continue to see trillions and trillions added to deficits, not just in the US, but globally, and there's no real way out of this other than printing, and I don't mean to continue to just harp on this point, but you want to look for quality assets in that sense, right? How do you define quality? Maybe when you look at some of the characteristics of Bitcoin, that's a good place to start. The limited supply, I think, the kind of the rarity element to it to some degree. Yeah, it'll be really interesting, right? We're talking about things and themes that are going to take years, if not decades, to ultimately play out. But the fact that that's how it's being described today, given what we know is ongoing and kind of maybe inevitable, really interesting to hear that. That's
Yeah.
maybe
And
that's
and I think Yeah, and I guess a sort of question to you on sort of the macro side of things. So obviously we've it's been clear that there's obviously the risk-free rate in the US is around sort of 5.5, 6%, which is just wild. Like, why would you trade equities if you're not doing it on a very consistent or day trading sort of basis when you have that secure way of 5.5 to 6%? I mean, where do you see with the sort of wider economy movement, what changes that pivotal point to then actually move towards I guess a more higher risk asset in its nature, even though the risk free rate may still be that 5.5, 6%, or you just see a complete sort of pullback from any sort of larger trading activities from retail.
I think ultimately you have to ignore nominal rates for a second and just think about the market's conclusion, or perception of what might happen here. And so whatever the rate is, what might get you interested in something that is risky, volatile, but ultimately could give you a higher rate of return. And I think that's the expectation that what any asset is priced in is going to be devalued or debased, right? We're going to increase the supply of dollars, in that sense. And I think that that's coming as a result of where rates are. Um, I don't know, do you see the economy collapse and then all of a sudden the Fed comes out and they cut by 200, 250 basis points? Like, maybe there's a non-zero chance of that. But I think you have sticky inflation. You can look at oil prices as a leading indicator of that, kind of high level. Um, you're going to see the Fed or the US Treasury here have to issue more and more debt. It seems like that's the theme. I don't think that we're all of a sudden going to see austerity that's in place. I don't think we're going to see restrictions or cuts. I think we're likely to spend more, for a variety of reasons. But regardless, who's going to take down that debt issuance? And I think, well, yes, you're still going to have foreign direct investment. You're still going to have the public. You're going to largely see the Fed monetize a good chunk of that. which means increased money supply, which means debasement. And how do you protect or hedge against that? You need that quality collateral. You need those quality assets. And that's what I think gets people to move into this, or to at least just allocate more than they are today. It's not like everybody's going all in overnight. Let's do this and put everything we've got into Bitcoin. But I think people are seriously going to consider an allocation, whereas they don't have an allocation on the institutional side, right? And that's again why the ETFs matter, because it's just easy to get that exposure. And I talked about this yesterday with Mike. But I think there is a point where, while in the near term, if you're looking for big upside in Bitcoin because XYZ happened, rates are a bit of a headwind. A strong dollar is a bit of a headwind. But over a multi-year time frame, where it's very clear these are the activities that we're going to undertake from a monetary perspective, I think people will ignore 5.5%, 6%, whatever it is, because you're going to need to be in something else. And there's just not a lot of people in that asset today.
Yeah, absolutely. And one of the topics that was discussed was obviously on the ETF front was around allocation that asset managers should be, I guess, putting towards Bitcoin as a sort of another asset class, which was really interesting. I mean, there is no one size that fits all, obviously, in terms of a percentage allocation that you should have towards Bitcoin. It depends on what the risk classification is of the asset, etc. But what was clear from the study, and I'll try and grab this so we can tag to the video, but was that it's clear there needs to be more than 0% allocation towards Bitcoin across the board. There's a rough 0.5%, 1% rule to sort of to a large majority of these ETFs, but it's very interesting to actually see it from that point. But if I was to sort of spin this on its head, we are very, very heavily in the space, very deep to all of the details that are sort of going on. But I mean, do you think that we're quite possibly, as an industry, even just a little bit overexcited about these sort of ETFs? I mean, can you see there being that possibility that all of these ETFs get approved and then there's 5 billion under management, which is then 2% of, or 1% of Bitcoin's market cap? Like, are we seeing it from that, possibly from an overly bullish perspective?
I think so at times. There's definitely the possibility that, again, in the short term, the market's reaction is counter to expectations. Expectations are that you see this headline, number go up. We've seen signs of that. And I, again, think probably that happens immediately. What's the time frame, though? Is it within an hour, in a day, a week, a month? Do you see some selling into that? Markets are very fluid, right? It's not just going to go straight up and continue going straight up for into perpetuity because we now have an ETF. My view on the ETFs, what matters is that when all the shit we've been talking about is front and center and everybody is awake to it, you now have so many more vehicles and have removed so much of the friction for the ability to get that exposure, to buy this asset, that at the same time has a finite supply, at the same time has a issuance schedule that sees its rate of change decrease. And we're going to see that again, likely in April, as you mentioned. So I think that's what matters, is that it exists for when any of these catalysts or any of these trades start to really come front and center. In the meantime, in the same way that people, I guess this argument could be made about a lot of other asset classes too. I just think that it's early enough in the life cycle or the growth cycle of crypto, even though we were, 10 years or so in, more than 10 years in on Bitcoin. I think that's what's really going to matter, is that it's just, you now have the ability to get that exposure if you want it. Doesn't mean everybody wants it right now, but when they do, it's there.
Yeah, absolutely. And it's going to be very interesting. I mean, even just in 12 months from now, it's going to be very interesting to see how all of these conversations actually come into play, and what sort of size of assets we have allocated towards these ETFs. But I guess sort of two final pieces that I'd like to touch on before we round this one up. So there was also, well, three things actually. There was the Bitcoin mining side of things, which was very interesting. So just touching on that very, very lightly is quite often the sort of mining side of things is, I would say, forgotten to some degree because traditional investors have had the opportunity to, I guess, invest into Bitcoin sort of through a slightly different direction in sort of this mining side of things, because you've got a number of listed mining companies, obviously, such as Riot, and a few others. But what's interesting is, from conversations that I had and heard, was that there's a lot of traditional energy companies that have actually been mining Bitcoin themselves because they have excess power from what they've been doing in their day-to-day roles, which is something that's not obviously always sort of out in the fore for people to see. But I thought that was very interesting. But not only that, is where actually a lot of these mines are, because there is the huge piece around Bitcoin mining around, oh, it's using energy that could be given to homes, and it's not very sort of carbon neutral or carbon free, like it's damaging the environment. But actually, there's a number of these mining companies of the US listed where they have their mines in Iceland, in Norway, in Sweden, right in the top parts of Scandinavia, where they're using excess energy, and it's hydropower that's actually creating that energy and allowing for them to complete those sort of mining operations. And from that, I'm no energy expert, but what was clear was they were talking about carbon neutrality versus carbon free, which is also an interesting topic, because with carbon neutrality, quite often you can just buy your way out of the energy and damage that you're causing to the environment, as opposed to it being completely carbon free in the whole process, which was a very interesting and fascinating point. But we have a space coming up soon, I believe, with a Bitcoin mining expert. It'd be good to dig into the mining side of things in more detail for sure.
Yeah, absolutely. I'd love to understand these companies from an investment perspective. I don't know much about it, so I don't know how you would analyze them, but to understand how to look at this and then make decisions around, what are the better investments would be great to find out.
Absolutely. And I guess the other side was CBDCs. So if you're a Bitcoin only sort of individual, the idea of a CBDC is pretty terrible. But I also think quite often people are afraid of CBDCs just more generally anyway, given the amount of potential control that is had over CBDCs. But that being said, I'm very much in the territory myself where I think there's a lot of benefits to actually having a digital currency, because we are moving towards a more digital era continuously. People that are under the age of 20, 25, 30 now have just continuously been growing with the ever evolving pace in which technology is progressing. So I think moving towards that digital currency is something that will have a lot of use and positives to individuals. But on the more, I guess, restrictive side, what's interesting is the amount of geo restriction that can be put on top of CBDCs, where there is like a sort of geo fence and where you can actually spend those currencies, which we've seen in some of the sort of pilot studies, which is a little bit scary. But I mean, I'm not sure what your views are on CBDCs.
I think it's whether or not the technology is abused, like anything else, right? And you might be able to apply that to how and we have a bit of a surveillance state in many countries. And I think some would argue that the technology has been abused. We have less privacy as a result, kind of just leave it at that. And so I think some of this is inevitable, the adoption of the technology. I think there's nothing to stop that. But we, as citizens, we hopefully have the choice to participate, right? We have the choice to protest. I think we have the power to stop it from being abused, but I don't think that that's what's on the table here in the U.S. Right? We look at one extreme, which is China. This is programmable money. It can influence human behavior. There can be constraints, and it ultimately yields a lot of power.
Mhm.
Would we see the
So
same thing in the US? I hope not. I think people would rebel. We tend to
yeah.
kind of be more on that side of things here. So it might be more convenient, but if you get it to the point where the government is confining what you can spend to a certain geographic area. I just don't think that's going to work, certainly not in the United States. But I would also argue that the transparency element, that exists. You don't really have a lot of privacy when you use any digital form of payment, right? When you use a credit card, it's pretty easy to see where you were spending money versus just cash. So there's an ongoing movement away
And
from cash. And
yeah,
eventually we'll get to something that's more on chain. It's just whether or not those added benefits, those technological elements are abused.
yeah,
Hopefully.
absolutely. And I think it's also important to remember, like you were saying there, with the current financial system that we're in at the moment, like at the end of the day, there are people custodying your own dollars, your pounds, right? All of the banks, they can flick a switch and stop you from making purchases, you know. So there is similar sort of elements and controls, but I guess it's coming from institutional level rather than possibly the sort of wider government or central banks. But there's sort of three closing points that I want to bring up on CBDCs. So firstly is around legal frameworks. So we talk here about not being abused. There are legal frameworks that have to be put in place globally for any of this to happen. They can't be released without legal frameworks being adjusted and adopted to allow for this new technology. It does not work with traditional legal frameworks that are in place. So that's sort of the first thing. The second thing is the size and the number of nations which are piloting CBDCs at the moment. So it was mentioned at the conference there's 131 nations working on their own CBDC proof of concepts, which is just absolutely wild. You know, you think, I mean, that is sort of such a high number of nations. And finally, is actually how many transactions have taken place through a sort of digital sort of currency to some extent, which was with a project called Project M Bridge. And that is a project that's run by the Bank of International Settlements, which have now settled over $500 billion dollars worth of this sort of bridging currency, which I think is really quite fascinating and something that's most definitely not at the forefront of news to any stretch of the imagination, given its scale. So we'll link that underneath this video as well. But yeah, I mean, there were some of sort of the pieces that came out of the CBDC side.
Awesome. Well, I appreciate you bringing all of the themes from Bitcoin Amsterdam to us today. It's fascinating to hear about what's going on. I wish I could have been there myself, but we'll do that next time. Until then, hopefully we do some more episodes of these. You and I'll jump back on some calls and record them here in a little bit. But yeah, for anybody that's watching, hit the like button, subscribe to the channel. We're going to put out more content. Something we've been talking about quite a bit here on Tasty Crypto. We've got a lot more videos coming, so subscribe to the channel to make sure you stay updated. But we'll be back soon. Until then, I'm Ryan Grace.
I'm Laurence Willows.
This is Value Unlocked. All right, should be good to go. I'll see you on the other call in a second.
Yep, cool. Catch you later.